Hey everyone, welcome to Breakout Wednesday for the 12th of October 2022. It's currently 4 p.m. on the West Coast, 7 p.m. on the East Coast. First of all, remember this is never financial advice. I'm not a financial advisor. This is simply a video blog on how one trader sees the market, and everyone needs to take responsibility for their own decisions. Okay, I'm going to do some different stuff today, but just quickly before I do, here's a chart of the Dow Jones, which is obviously still in a pretty strong downtrend. The All Ordinaries, likewise, we had that bounce, but then we've had 4 or 5 days of down action. And so quickly, just a few stocks I talked about last week. IGO had a breakout and it's been able to hold it. It's just one of the few. I have a position, but it's a small one. ICT was waiting for another couple of weeks. This is trading short breakouts from short-term consolidation periods in the middle of a bear market is an incredibly dangerous thing to do. This needed a lot longer. It didn't give it to us. No trade. GRR. Okay. I have actually trimmed a tiny bit to take my risk off, but I'm still in it for most of that. Let's just get rid of these because they're absolutely useless at the moment. And what else was there? Some violent snapbacks in stocks that have awesome day one breakouts. So SNDX just broke out a massive volume and it was looking great. The next day, boom, okay. And one I didn't talk about last week, but I posted to Twitter, TER, huge breakout from this little right-hand handle, a massive wick up the next day, and then a fake out, okay. Not as violent as SNDX. And so this kind of brings me on to what I want to talk about next, is about risk reward and grinding out profit based on risk reward. So here's just a little table I did up, and I'm just going to try and make this bigger. Yeah, there we go. All right. Okay, this top one, just look at this top one here first. The left-hand side is risk reward, okay, 1 to 1, 2 to 1, 3 to 1, 4 to 1. Across the top is the win percent, so your win rate, 30% win rate, 40%, 50-50, 57%, 60%, okay? Not going beyond 60% because anyone that says their long-term win rate is above 60% is probably, completely full of shit. The reason this 57% is steeped in gambling and trading kind of history. 57% is the number that a professional sports gambler needs to win to make a living over the long term. Okay, professional sports gamblers against the spread and totals are gambling kind of $1.92 odds, and if you do the math on that, which I'm not going to now, but and it's brought across into trading circles sometimes, the whole 57% thing. Okay, and it is true, like most long-term successful traders I know have a win rate around 57%. Okay, it's an amazing little fact of life. Right now, on the left-hand column, I've already said that. Now let's just quickly go through it. This is risking $1,000 per trade, and the top table here is 100 trades. Okay, just 100 trades, not many at all. At a 1-to-1 risk reward, if you win 30%, after 100 trades, you're down 40K. At a win rate of 40%, after 100 trades, you're down 20K. You can see this, right? At a break even, obviously, you're flat. 57%, you're up 14K, all right? Now, that's risking $1,000 a trade, 100 trades, you're only up 14K with a 57% win rate, okay? Now, in a bull market, then, like people who have been listening the last few years, then obviously a 2 to 1, 3 to 1, 4 to 1 is what traders talk about because it's so possible. And that's why trading is so much better than other forms of risk, like gambling, and, is because we can get much better risk rewards on a regular basis when the odds are in our favor, i.e. a bull market, or if you're shorter in a bear market, I guess, okay? Now, a 2 to 1, you do the math, 30% win rate, you're still losing. 40% win rate, you're winning. 50% win rate, you're winning. 57%, you're really winning. 60%, you're really winning, okay? If you take that to 3 to 1 during a bull market, you only need a 30% win rate, okay, to make a profit, all right. And you can obviously see this yourselves, all right. If you not many people are 4 to 1 on the long term. I guess there are moments during a bull market when many trades can get hit at 4 to 1, but you'd never be hitting all your trades at 4 to 1. You'd have a mixed bag, okay. Then let's just take it up, because the whole point about trading is to become the casino, right? And 100 trades is meaningless. It's about your next 1,000 trades, okay? And the numbers change once you get up to that, because the edge starts playing out a lot more, all right? And 1,000 trades, obviously 1 to 1, you're losing a shitload if you can only win 30% of the time. 40% of the time, you're still, getting bent over. 50% of the time, break even. 57%, you're starting to do well. 60%, you've done good. Okay, 2 to 1, blah blah blah. 3 to 1, 4 to 1, you're making a pile of money at 4 to 1, but no one does that, right? But let's just stick to our 57% win rate. At 2 to 1 during a bull market, you're making good cash. On your per 1,000 trades, you're making $710K if you're risking $1,000. There's going to be people out here who are risking 10K per trade. Hell, there's going to be people risking 100K per trade, but then there's going to be new traders who are risking $50 per trade. It doesn't bloody matter. It's each for your own, but this is just a table explaining the numbers behind the whole game, okay? Now, at the moment, let's assume most people listening to this do not short, and they're not, sticking with their shorts, and they're more kind of, biased to the long side, which I am. I mean, I do short, but I'm definitely biased alongside. And now, making more than a 1-to-1 risk reward right now from the long side is very, very hard. You would need to be nearly a magician, okay, to be making 2 to 1 consistently at the moment, going long in stocks, okay. But there is an argument that if you are shooting for 1 to 1, you can be eking out profit still, okay. And at 57% win rate, it depends how many trades you're doing, all right, if this makes sense, okay. And so I wanted to quickly talk about these two trades here, TER and SNDX, because they're great examples of trades that you want to see this fling out and have a huge upward trend. But in a bear market, the market isn't offering that to us. It's offering us little scalps, okay? Massive breakout, huge volume, wick up, bang, showing signs of trouble, and then it's breaking back down. SNDX, okay? Violent breakout. There was, I had obviously a decent position on that. I was up quite substantially dollar-wise, and then it starts breaking down, and I'm getting out here for a small win and watch most of that evaporate, okay? But I think most people who have been trading for a while probably back themselves to pick these at least 50% of the time, probably 57% of the time more accurately, but at least 50% of the time. So what my argument at the moment is, and it's always kind of this argument during bull markets, is that we need to revise our risk reward. If we're trading alongside, we need to be realistic and realize, hey, we're not all giants and absolute wizards. Hitting 2 to 1 alongside is probably not realistic. If you can shoot for 1 to 1 and have a 50% win rate, you can still make a living if you're trading enough. Okay, if you're doing enough numbers. Okay, on the short side, it's a different game. I'm not going to talk about that today. And so definitely at the moment with my trading, I'm very, very, very flexible. Hell, I'd like SNDX to just fling up and, double. But in reality, I'm not getting that. If the market's showing signs of rolling over, I'm going to take my 1 to 1 or whatever and get the hell out of there. Okay, and it's the same. Doesn't matter what I'm trading at the moment. That is the way I'm viewing every single trade, okay? Because I prefer to make 1 to 1 and keep making a lot of trades and eke out money than stick around trying to make 2 to 1, pretending that it's June 2000, April 2020, and being delusional because, the game's changed. We're 2 years later. And if you're stuck in the past, you were going to get obliterated. Okay, that's that. I hope that little table helped. You really need to know and understand these numbers You know, I know a lot of people don't like to view stock trading as gambling. It is 100% glorified gambling. And you show me a good, you know, there's an old famous quote, you show me a good stock trader and I'll show you someone who understands gambling, okay? And professional gamblers understand these numbers, stock traders understand these numbers. If you don't understand these numbers, then you're going to be one of the losers down here, okay? Right, now a few other things about stocks before I piss off. The banks are strong at the moment, okay? You know, obviously, you know, it doesn't take a rocket science. You know, banks are going to make money in an increase in interest rate environment. They're going to make money in, you know, a deflationary environment. They're just going to make money, and they're not going to let this hurt them. And they're showing relative strength. That's CBA. That's NAB. That's WBC. There's I forgot one. ANZ. Okay, there's money flowing into all of them. Okay, and they're all showing massive relative strength. That's interesting. The other thing that was interesting, a mate, Craig, pointed out to me today or yesterday, I can't remember, that IND, about how, I murdered that, didn't I? IND, about how strong the Indian ETF is at the moment. You know, it's not really looking like a bear market, is it? And that's the ETF on the ASX. The Nifty isn't looking as good. This is just the Nifty. And which is obviously, for those who don't know, Nifty is just the Indian index. And so, yeah, I mean, it's looking a hell of a lot better than the ASX or Dow Jones, right? And so, you know, make that as you will. Indian market's obviously stronger than, you know, the American, Australian, and, you know, I'm not going to rattle through all of Europe. The other, just quickly, is that there are some shorts, and Ramsay Health is setting up here. Could just fall off that ledge. They had a takeover talk fall through. You can read about it. But and you know, if that was if we inverted that chart and it was a bull market, we would have all these people posting to Twitter about how sick this setup is, how they're going to smash it. But we're in a bear market, and you know, people don't tend to retrain their brain for the shorting game, but just pretend that's inverted. There are, you know, if you want pro traders to start inverting charts, send some notes, write some comments below, because it's a piece of piss. I'm sure they could get that done relatively easy. And then everyone can just pretend it's a bull market, you know, during a bear market by inverting. Okay, that's it. I'm not going to talk about any other stocks, because, you know, from the long side, you've got to be a bit of a mug to be trading too much right now, other than just pure scalping, you know, for opportunities that come up. You know, like, I love looking around for things like GRR, and trying to get in and out. And, you know, yes, I have a profit target up there, but, you know, honestly, that's probably a pipe dream. I'm going to take my 1-to-1 or 1.5-to-1 risk reward, or whatever it offers me on the second half. If it starts coming down to break even, I'm scratching it, and being ruthless as possible with my stops and my management of each trade. Okay, I hope that helps someone out there understand the numbers behind gambling. Cheers, bye.